Good afternoon, everybody, and thank you for joining us today. I wanted to share some news with you before handing over to our wonderful moderator, Helen Zulu. We, as the VUCA Group, are very excited to announce the C&I Solar+Storage Summit Zambia, which is taking place on the 27th and the 28th of August at the Pomodzi Hotel in Lusaka. This program, which is aimed at commercial and industrial concerns, will be delivered in partnership with the Ministry of Energy of Zambia and is tailored specifically for Zambia's C&I and large power user sector. In our program, we will address some of the unique challenges faced by Zambia's commercial, industrial, and agricultural users, and this also includes sectors such as retail, manufacturing, agriculture, property development, and energy-intensive industries such as mining. The focus of our summit aligns very closely with the focus areas of the National Energy Compact for Zambia and supports the government's drive for an aggressive economic diversification and industrialization agenda, driven by mining, agriculture, manufacturing, and tourism. We invite anyone who's interested to reach out to us for more information. Please check the comments section for details of the website, as well as a link to the program and information about our hosted buyer program. We really hope that you will give this your consideration and that we will have the opportunity to see you in Lusaka in a couple of weeks. However, for today, I invite you to take advantage of the knowledge sharing opportunities that are being presented in this discussion. And with that in mind, I'd like to hand over to Helen, who will be your host for this afternoon's session.
Thank you. Good afternoon, everyone. Good morning, good evening, depending on where you're dialing in from. I'm your host for today. As Claire said, I'm Helen Zulu, and I am from NG Energy Access. I'm the country director for the Zambia business, and we are represented across Africa in an additional 8 markets. So for today's conversation, as Claire has indicated, this is a precursor to the main event, which is going to run from the 27th to the 28th of August at the end of this month, and we're looking forward to you being there. Our speakers today will cover a number of very important directional points. And obviously, each of you will have some questions, some contributions. I would encourage you to please add them in the comment section, which you will see on your left-hand side. To get into the conversation, without further ado, I will start by just giving a summary of what the industry looks at. You will agree with me that the mining and energy sector are deeply intertwined. And it's very key in Zambia, particularly because the mining sector is the key driver of export revenue in our country. However, there have been challenges. You will note that in Zambia, our grid is very hydropower centric. So with that, there are a lot of initiatives that are in place currently to amplify the additional solutions that we can come up with. And in this conversation today, we're going to discuss how that can be useful, how that can be sustainable, but also how that can be cost effective. So without taking much of your time, I'll get into introducing our very excited and experienced panelist. I will start with Henry. Henry, please, you can introduce yourself and tell us why this conversation is very important to you.
Appreciate it. Thank you so much, Helen. Afternoon, good morning, good evening, everyone. My name is Henry Marbert from ESI Africa, and it's excited me to share with you what we bring into market and what we got right and what's working for the industry in mining when it comes to battery energy storage. And yeah, we look forward to doing some discussions with you guys.
Thank you, Henry. We're going to move on to Joe.
Hi, everyone. In the chair, so I'm coming with a couple of hats here. The chair for the South African Energy Storage Association. And for South Africa, we're looking to open sort of satellite agencies across Africa in the different countries. And then I sit on multiple other entities. I don't think I want to list all of them, but one of the key ones is my own company that I represent here, which is a company called Energy Carbon Management, and it's got a couple of subsidiary companies. And we have just put down the first grid-forming large-scale utility battery in Africa. So it was hard work, and I think we want to share a lot of those learnings, and it was specifically for a mine. Thank you.
All right, our very last panelist, Rian, please, you can introduce yourself.
Hi, good day, everyone. It's great to have you all here, and I'm looking forward to the discussions. I hope you find it insightful. And for me, what brings us here, and the important thing that I hope to participate in discussions with is the mining sector in Africa. I mean, it's been stated a lot how important it is, not just for Africa, but in the global context. All of the minerals that we have in Africa, that's critical, not just for the energy transition, but a variety of other purposes. So we're sitting on a wealth of minerals, but in many cases, it's having the resources alone is not enough. We've got excellent wind and solar resources and gas resources, but a critical component that we see at S&P Global for Africa to really tap into its vast mineral potential is energy access for the mines. We've come across it a lot when we speak with our clients and the investors looking at investing into projects. And essentially, it's not just limited to having power or not. There's even sometimes installations that we look at that's paying a incredibly expensive amount or incredibly high amount for their power. And that's got a significant impact on the operational efficiencies of mines in Africa. And if you add to that reliability and other things, it puts us at a disadvantage when it comes to producing competitive minerals. And if you look further at the beneficiation of materials, it's similar again. It really makes it challenging for us to be competitive in the global arena. As I said, I work at S&P Global. I'm in the power and renewables team, where we support investors and banks, governments, and energy companies on their strategy and acquisitions in the power and renewable space. But S&P Global goes much further beyond that as well. We're a comprehensive consulting, data and insights provision company in the commodity sector. Looking forward to the conversations.
Thank you, and thanks to all of you. Now, to start the conversation, so recently we've seen a lot of solutions, a lot of businesses, a lot of developers coming on board, and a lot of investments in the renewable energy sector. However, we can generate electricity, and definitely there's off-takers there ready to take them. But the question is storage solutions as well. And the conversation for today is very different because it's looking at generating energy, but also storing. And then we're also focusing on the commercial and industrial. So what can we offer as solutions? To kick it off, we're going to talk to Henry a little bit. Could you tell us what the role of battery energy storage plays in improving energy reliability as well as the cost efficiency in the mining operations?
That's a good question. Thanks, Helen. No, I think it's, to start with, is that there's so much different options in battery energy storage, and there's so much different vendors in the market that it's a tight race. So what we focus on and then what we find is obviously improving energy reliability. We offer systems and build systems that not only works as an energy storage system, so it gives the customer some additional functionality to improve the reliability, because obviously we know, and we covered it a bit earlier, is that a lot of the mining looks at hydropower, but if there's no rain, there's no water, there's no power to be generated. So what is alternative to to feed these energy storage systems if there's no power feeding. So we focus on adapting systems to be able to operate or charge via different power sources. Okay, and then a big focus for us on that point as well is the cost saving. So yes, energy storage is expensive, but what is the long-term investment and how we can alleviate some of these costs for the customers in the long run. Okay, sustainability is as we see sustainability, we everyone wants to buy become carbon neutral. We know in the mining industry that it's going to be very hard to do. Okay, but when you look at the mining environment, sustainability for them is more seen as getting reliable power and constant power to the mine, so that they can operate. So that's where we see we some of the fundamental advantages we can do here, and what we found working. So adapting the systems to what the customer requires, and not only offering as energy storage, is the main focus on what we're trying to achieve.
Okay, thank you so much for that. We're going to now circle back to Joe, who's got 18 years experience in the mining sector. What are the key considerations that we need to look at when developing a renewable or a hybrid energy system, particularly for a mining site? Joe, you're on mute if you speak.
Apologies for that. I think what we mainly need to focus on is you first have to understand the entity that you're supplying the technology for. So from a agnostic point of view across the sector, what's available to us, but it's the utilization of that and understanding the dynamics of the mine. So you have two different instances. You have certain types of mines that are very well established, that are looking for relief on pricing, that are looking for security of supply, that are looking to garner credits or kudos, basically from ESG benefits. Because if you're in the gold industry, and most of them are contributing to the World Gold Council, Copperbelt, they've all got their different tick boxes and their different owners and different shareholders that have different views on that. So you firstly have to understand that. So you have a mine that's established and that wants sustainability and security of supply. And basically, most of them are facing challenges on life of mine studies. So they might have a limited lifespan that they want to be able to extend. And one of the core dynamics in South Africa would be that if we looked at 10 to 15 years ago, the price of energy was the cheapest in the world. You know, I mean, the mines and all, we know this. I mean, we've seen the drain of all the smelters shutting down and packing up and going offshore. So the cost of supply is very important to them. If you can reduce the cost of supply, if you can bring stability to their operations. And then also a lot of them either have age technology that requires a sophisticated system to be able to fill the gaps and valleys, so that they don't have, they're very susceptible to voltage drops, and that they need continuation of supply. They want very fast response times to any any dip, whether it be a grid that goes dark or any other related. And then the other type of mine that you find, and that's the emerging mines, which are the guys that are going to bring us basically the beneficiation for all these materials that are required within the renewable space. And these would be your lithium mines, your copper mines, and related. Those have got a different focus. Those are emerging mines, and they're growing. So how do they get security of supply? How do they initiate the power requirements and comply to them, but have an aggregated focus on a milestone planning? So you'll have different type of elutions that have to be established, and then you've got this ramp up, maybe even to where they're doing processing. So you see it in the steel industries as well, where they want to add on cold gold or rolled, or in the case of the copper guys, to actually have smelters. And I mean, that can take up to anything like 80 MV. So it's a very interesting focus, because you've got one where you're downscaling one, or you're trying to extend the life of mine on an established one, and you've got another one where you can't do these things modularly. I mean, a lot of people want to focus on modularly. What is available for you to encourage a ramp up of energy supply that still provides the bottom line of return on investment, one, on the capital required to establish the sustainable energy source, the clean energy source, and The second focus, well, I think that's enough for now. That's just like a sort of the opening introduction. So you have to understand first the client, then you have to select the technologies, and then you have to look at what's available in the grid. So if you take a grid focus of Zambia, you would want to do establishment of power on the mines and then service the expanded grid, the local grid, because they have great grid issues and grid supply issues. So you bring stability to the grid. If you're in South Africa, you'd look more to stabilizing at a central established point or at the new entry that's coming, and then you're expanding by exporting to the grid. And there's multiple computations that you can utilize to ensure the return of revenue. So we can chat a little bit about the project that we worked on, because it sort of ticks most of those boxes. Thank you.
Okay, thanks for that. It brings me to the question for Rian. And I must say, we already have a question in the chat. So Rian, if you could just consolidate my question with the one in the chat to speak to the alternative offtake and multi-commodity mining firms. Now, to come to your question specifically before you add that one, from your perspective, what trends are you seeing in the mining-linked energy infrastructure? Exactly what deals are happening? Who is financing them? What can you tell us? Which of the regions and markets are seeing most investment momentum happening? Over to you, Rian.
Thank you. So yeah, in terms of the regions and the types of projects that we see, so we've got in Commodity Insights, so part of the business, they track corporate energy procurement, and that's globally, including Africa and Middle East. So the caveat to this is it's limited to corporate power purchase agreements. It doesn't really have in-depth coverage of behind the meter that's installed on the site of the mining company itself. And it also doesn't include any sort of government initiatives. This is purely from, for example, a mine procuring power. And it's also limited to deals that's been signed. If we look at Africa as a whole in terms of all of the corporate power procurement, mining is probably in the top 4 or 5. It's under sectors like manufacturing, services, and chemicals. We see it's about 9.9% of all corporate clean energy power procurement. I forgot to mention that it's clean energy, so it's hybrid PV, and wind power. So it's about 9.9% in Africa. And if you look at the regions which that covers mostly, if you look at in which countries it is, it's mostly focused on, at the moment, at Southern Africa. So everything from below the Copperbelt. The countries that we see most deals happening is in the lead is South Africa, where we saw a few significant deals. And then Zimbabwe is second to that, with also a couple of significant deals in capacity. And then in third, it's Zambia, and then it's followed by DRC and other countries. But sort of between South Africa and Zimbabwe and Zambia, that's probably, just judging with my eye at the moment, it's probably around 80% of the corporate deals that we see. When we look at the off-takers, we've got analysis on which off-takers it is and which mining companies. It's a range of different mining companies spread across that region. But a few noteworthy ones, or larger ones, are ones like Glencore and Rio Tinto and Anglo American. But so we see the focus mostly in that region. Coming to the question on the PPA that we had on the chat, I can maybe answer the part which we normally support with is sort of looking into alternatives to the PPA. We're not legal advisors that looks into the structure of the PPA and things like that, but we look at alternatives, and we weigh up alternatives for the clients. And one thing that we normally look at there is alternative scenarios, and we also see a lot of developers looking at it. They're not just looking at supplying power to a corporate client, they're also looking at using power pools. and how they can create alternative offtake in the merchant market, for example, like SAP, the Southern African Power Pool, to sort of increase the revenue that they can get out to balance that risk. Another alternative that we've seen is a preference for what we call multi-commodity mining firms that covers different commodities. That's one thing that we normally also identify as a mitigation to an existing or to a specific PPA, what alternatives there are if they need to consider different offtakes. I hope that answered the question at least in part. I unfortunately can't speak to how you can hedge and things like that against in a PPA or anything other than the usual take or pay and how to manage that. Unfortunately, don't have anything specific to that at the moment.
Okay, Joe, would you like to add anything to the question?
Yeah, thanks, Helen.
Yeah.
Yeah, I think so. I think we have to look at the markets where we're going. So if I can table a scenario for you, let's sanitize a solution. So you have a mine that's got a challenge on price of energy. They're obviously hedging against the commodity price, so the prices are going up and down. They need a stable cost of supply, but they need to reduce cost of supply. And as I said, that normally primarily extends the life of the mine, which gives them the availability to do the expansions that they require. So the mines are very hemmed in on a production basis on what they can actually execute and deliver to. And as I said earlier, now, price of energy used to be dirt cheap, and it's now, sort of an expensive commodity. I'm saying now in a South African situation, but I think it's no different across Africa. So when you look at that base case, and also when you're looking at the mine that wants to expand, they both have the same. You know what I mean? They want to reach end goal. They want to reach longevity. When they start going out for PPA tenders and that, there's a level of no control, firstly, that they have on the PPA, because it's all or nothing. So if you just went for a standard PV PPA or any traditional PPA, it's set, it's fixed in stone, that's what you're paying. So maybe it gives them that flexibility. But when you start looking at other elements that they want, the security of supply, or one is you want to evacuate the power, say, for instance, to the grid. One of the biggest opportunities within this, can I say, innovative way of approaching the PPA basis is to say, how can I flex my power? So when you start looking at aggregation of power, and I'm not talking trading or anything else, I'm talking about primarily utilizing, if you've got third-party related accounts or other mines or whatever that you can seamlessly engage, then you can redistribute the power by basis of wheeling. What gives you the ability to give the security suppliers, wherever your generation source is to place your battery storage system basically on site. So there's multiple flexibility, because the bank is looking for recourse and they're looking for the ability to define a return, right? So the biggest problem any of the mines have, or anybody, banking and IPP, I don't know if anybody's been on the journey to financial close, the ability to create more risk is infinite. So the ability to de-risk it is the ability to redistribute the power that you own. One is that if you face early termination, your power can be packaged into grid for other entities. So, or two, if you have a short lull in I can say consumption or usage, there are other off-takers to be able to take it. And we've created a mechanism, I think, which we're very proud of, which is the seamless transition of mass generation or single generation that's going to a pool of buyers and off-takers, which then gives your financial institutions that comfort. The same applies if the mining entity had to do it off balance sheet, so on balance sheet. Sorry. So if they did it on balance sheet, they're also looking at the same scenario of what happens if I face a determination. I don't want to have a stranded asset. Can I redeploy the energy? So I think we need to open the conversations. And I'm not talking about day ahead markets or anything else like that. I'm just talking is like, if you've got X amount of kilowatt hours, how is the best way that you can resource it to give the best return to the entities? And we've managed to leverage this with this first project that we've put down. And it's interesting because it's when I said to you in the beginning, when you embark on any ventures with a mine, you need to understand the core dynamic and the core drivers of the mines, where the, how can I say, pitfalls are and the challenges that they're facing.
Thank you, Joe. Thank you for that. Now, I like the fact that you did highlight earlier around the different type of mines that we'd be dealing with, and one of them was emerging mines. But so in Zambia right now, there's a lot of emerging mines. There's small mines happening, especially in the northwestern province, somewhere in Lopula province. There's some mines, and there's discovery of minerals in areas that were not actively mineral sites. So, Henry, I'd like you to maybe walk us through how do we approach design storage systems for remote mines with variable load profiles. So initially we look at larger mines that will have a larger load profile and demand. But what if there's a variation in the demand for that particular mine? What else can be considered with starting this kind of a project?
Okay, thank you, Helen. Yeah, so what we do is that obviously we start from the beginning, so we have a sit down with the customer, and we do project initiation. So as Helen Joe said earlier, is that there's no mine that operates the same, and there's a lot of different aspects on different mining. So what we focus on is first of all what the customer requires, okay, and then we give them a complete rundown on exactly what they can expect of the systems and how we can adapt to the load profiles that they do, because it is doable. Then obviously the project initiation kicks in. We spend a lot of time with the customer and the engineering team to look at what the mine offers, look at what the requirements are, and also giving them additional feedback and input on where we can better and what more we can offer them when we're building this, looking at the profiles. So for us, fortunately, as a company, we can do the complete solution because we've got quite a big scope. So we want to be involved, not only as a box shop, but what we are focused on is initiating the project and doing a long-term relationship with the customers. So we'll handle the control philosophies. We will help them to migrate into their gen sets and other power rooms and stuff. So we've got that ability, and it's a focus point for us to just walk the extra mile and ensure that the best optional energy storage that they implement works for them and gives them a long return on investment as well.
Thank you for that. Just a check, can you hear me clearly? My internet was glitching just a bit.
No.
Okay, cool. So I'm just gonna pivot a little bit to reporting and around ESG. Rian, maybe you can help me with that. In terms of performance influence on a mining access to capital for energy projects, we know that ESG lately is very important. What besides ESG performance is important for a mining company that is coming on board?
Yeah, so I've actually, in preparation for this panel, I've actually reached out to some of my previous clients in the private equity and DFI space, and a lot of these investors and banks have got very strict ESG departments. I'm not talking about the typical infrastructure investor that invests in mines as well. There's a lot of specific investors that the ESG teams were previously kept on pushing them away from mines because of that potential risk on their reputation. But what a lot of them told me is that they see that a lot of the ESG teams are coming around to understand the importance of minerals in Africa, and they're all learning how to work with the power and renewables teams and the other teams within their business to be able to finance power projects that's related to mines or mining sites. But coming to sort of the other important factors, I think, and we've touched on it, the key thing is a mine must be bankable. That's probably one of the most important things other than ESG. I mean, ESG is very important for the investors to be able to be linked to a specific mine, but the other things that's probably just as important or even more important is the project feasibility. Then coincidentally, we also covered risks. I've got risks here in my list in terms of offtake. What alternatives are there? If we've just discussed the one scenario. If you're in a new identified remote area and there's no grid or other companies or other mines, you could be limited to that one off-taker, which creates a whole different risk profile. That's the other thing we see is risks in terms of the offtake. And then also market demand. We believe a strong market demand can actually create an anchor for more projects and de-risk future projects in a sense because of that effect where there's alternative offtake. So we see that important alongside transmission reinforcements and just ensuring that energy infrastructure as a whole, instead of just generation, is in place. And then the last thing I want to say is the regulatory environment. That's also critical, is to create that safe environment for the investors where they can understand the regulations, they can identify any risks in it, and that it's consistent as well. That's very important for them. That's sort of the key things that we normally look at when we support clients.
Okay, great. So I'm just going to ask that we pivot a little bit to a conversation that is heating up in the comment section around SAP. So I'll ask Rian, if you can continue a little bit. Are you able to give us, maybe just tell us a little bit about trading on SAP, and how is it an effective option, as effective as a PPA? Or maybe just pretty much tackle the questions. I think there are two questions that are on the chat.
Yeah, I think I got all of them, but yeah, coming to sort of the key thing is how you can trade on SAP. So obviously your source and destination countries you need to have a license, or you need to have permission from the utility in that country to be able to trade. You need to have a trader then that's a SAP operating member that can act on your behalf, or that can act on SAP. But maybe the most important things is how SAP is set up in terms of transmission capacity, because we see the most important thing on SAP is transmission capacity. And if SAP can continue with their plans and as they're planning to reinforce the network, that's critical for SAP. Because if we look at SAP and we compare it to other power pools in Europe and North America, there's this thing that they call a churn factor. So I can't unfortunately put it on the screen now, but if you compare it to other power pools, for example, in Europe, power sometimes changes hands 3 times before it's used. That's what a churn factor is. So Europe would have a churn factor of 3. I think SAP doesn't even have a churn factor of 0.1. And what that speaks to is the low liquidity on the market. And that makes it really challenging for the power pool to really use that market. I can go on in terms of what you can do on SAP. You can always trade through bilateral agreements, and it's allocated on most historic contracts. So you can sign a PPA with an off-taker fixed PPA, and that's what the utilities do and have been doing. You can sign a long-term PPA, and you can use the SAP network. But you go into a queue where, based on the oldest PPAs, get transmission access first. And if anything on the network changes, you might not have capacity for that trade to happen. And historically, we saw a lot of those trades being blocked when there was disturbances on the network. So the network is still at the moment very sensitive to that, like most networks, I would also add. But that's sort of a critical thing. And if you look at the day-ahead markets, you go down in the queue. So it's first the bilaterals, the firm bilaterals. Then you go into the competitive markets and other things. And that's how the allocation process works. Unfortunately, I cannot go in full depth of this due to time, but there's a lot more I can add, can speak to that in terms of what that means for the risks in the different competitive markets and the firm bilateral markets and how it works within SAP. But I think that's the key risks there for a bankable offtake on SAP is whether you can secure a long-term corridor through SAP to transfer the power from your destination to the source country. And a lot of the times that involves going through an intermediary country. And that's where we see a lot of trades being brought. Yeah.
Okay. Thanks for that. And I like the fact that you also referring to the fact that definitely there's some risk involved in these investments. And that brings me to the question around financing and risk sharing model. Joe, are you able to just give us a snippet of what are the possible models that are available in terms of risk sharing in this industry?
Helen, just expand a bit on the risk sharing.
So we're looking to discuss what financing or risk sharing models. So if there's a particular risk, for example, there was the example that Rian gave, where you are using your market, for example, if it's in DRC, your customer is in DRC, you're in SA, and you're transmitting power. And if in this case, you're transmitting power through Zambia or Tanzania, either of the two, the question is, there is some risk involved. So how do you then mitigate that risk? Is there any model that can be implemented in terms of sharing the risk across the party involved?
Yeah, so basically that's what we looked at. Let's look at it on a national basis. Let's just park the fact of you want to do inter-country, because I think if you can understand a simple principle on standard grounds, then one can expand on that. So the same scenario exists even in SAP exists, and if you have a mine, I have a mine in KZN and I have a power generator in the Northern Cape. I can spend 2 years trying to convince a bank or de-risk that project. Same risks that you of going across country. It doesn't matter whether it's on a short span internally within the country. Once you have a single buyer and a single generator, you're bound to have to over provide multiple risks, right? Because they could be off, they could be off. When you start expanding on that and you start saying, look, let me increase the buyer's pool, let me have the buyer's pool oversubscribed, and I have my one generator. The generator has then got an opportunity to flex it across. But then you start creating the requirement to embellish on the generator side as well, because now you've got a pool of buyers that have got an extra requirement for power, and then so you can substantially grow the generation pool. Also, your generation pool can be then cross-purposed in the sense what you need is you need to have multiple sources, because we're talking wheeling now, right? We're not talking direct supply to entities. We're talking wheeling, which is pure offset against your counter. So now, if you look at the load profiles, are you going to be putting down PV? Are you going to be putting down base? Are you going to be putting down wind? Or are you doing PV or base? So then you can actually fill a full load profile. So you've got, I call it my mixing bowl. So in the center, I have my mixing bowl, and I've got X amount of generation. I pop all my kilowatt hours here, and I've got morning ones, evening ones, time of use ones, which I can apply across the multiple buyers. When you start having a national pool like that, you will then eventually maybe get to a point that you would have access and to be able to participate in the power pool. The power pool constraints must be the same, because what if you're going across countries and there happens to be a failure? We've seen it. We've seen the major power lines go down with extreme weather conditions and that. So in that inter-country, where would you then redisperse the energy? So we need to have a bigger picture look. So everyone is trying to start on a very small scale and say, I've got all of these entities and I need to fill this little wedge that's here. When you've got a bigger perspective and you've got multiple customers, incrementally you aggregate all your loads and you aggregate all your generation, but you've got this bigger myriad of population that you can apply. And that is going to be the solution, because if you think of the biggest dream we ever had was the Cape to Cairo ability to have energy access. So it's like a come along and pull along. You've got to have each one helping the other one, because as you grow it automatically attracts the stability or the de-risk in it. Because all the bank wants to see is who's giving you the credit rating on the left-hand side, and will every single kilowatt be applied. So I don't know if that answers your question, but I could draw it for you if I had a board. It's very hard to do today.
To the listeners, it will be for them to come in actually during the event. We will have enough space for us to draw the examples. So I'd like to then ask Henry to give us a case study. We're talking about storage and the different options that we can have. We're also talking about the fact that we want to supply power into the mines. But then Is it really operational? Is there positive financial impact? Could you give us a recent case study where storage has made significant change and benefit to a business?
I definitely can. So if you guys don't mind, I'm going to reference a recent project that we concluded and we are busy monitoring as we speak. So obviously, just to get back to on how we do our systems is that we look at other alternatives on how we can accommodate the customer. So obviously we supplied energy storage. This is but part of our offering to the customers is that we provided some security on power, provide voltage frequencies. Provide voltage and frequency stabilization. That's part of our offering. So what that will mean is obviously that the power coming into the mine, we know that it's kilometers of power, and we know it might not be as constant and reliable as it should be. So that was one of the first factors that we sorted out for the customer. And it was a 5 megawatt system, okay, that we stabilized for them. And part of this build was that we did a control philosophy to get the BESS working with their gen sets. And 2 weeks ago, we got some feedback from the customer. With 4 weeks running now, they already saved close to $100,000 just on diesel, where the BESS took over. And the intelligence on the control philosophy between the BESS and the gen sets working together, where the BESS will take more of the the demand, or be the preferential contributor to the power, and then if it needs to, the gen sets will kick in. Okay, so that was quite a significant number that we saw within the first 4 weeks of operation, and that even excludes all the savings that they were planning to do on VSD motors and stuff that they had blown in prior, because with the poor quality and harmonic instabilizations they had. So to conclude that the customer, they planning on, well, their saving estimate for the years is now coming close to $3 million that they're going to do after putting into this BESS. So I think it's quite a good number. And the last thing I just want to add to that is that we have the capability to switch over from power to battery in less than 100 milliseconds. So that counts a lot for the motors and the breakers and stuff, just saving them some replacement fund, replacement costs on that quick transfer speeds. So yeah, that was quite a good case study, and very positive feedback for us on what our BESS system is capable of doing.
Thanks, Henry, for that. A quick reminder to everybody: if you got questions, please put your questions in the comments section. We'll be getting to the Q&A section soon. My last question goes to Joe. How would you navigate permitting, logistics, and stakeholder engagement in remote or cross-border mining projects? How is that workable, and what advice would you give for somebody who would like to invest into such a venture?
It's a good question, because I think most of the countries are aligned on the core principles. What we do find, and I think it's no different than in the South African context, the very first part is as I said before, it's to define your grid. Does your grid need strengthening? Are you going to be utilizing the grid and expansion? That's the core principle first. You battle a lot with grid and network studies, and you battle a lot to get the data from different utilities in the smaller areas, and maybe sometimes no different in the South African basis, except that you pay huge fees to Eskom to sort of obtain that data. In the African countries, the NEMA, we would have NEMA on our side, all your EIAs, all your other principles are going to remain, because you are engaging with the mines and they've got to comply to their standards. You know what I mean? So whatever they put down, it's not just a sort of a free for all. Be very cautious in what you're doing, because they are very trigger sensitive to their current footprints in their current environmental reporting. You've got multiple elements coming at you when you're working on mining grounds, because you report to a different designated national authority when you're reporting on, say, for instance, your EIH, your WILAs, and your related. There's less complexity. The turnaround times are faster on the permits and licensing, depending on how good and how fast your specialists are. We have a myriad of layers of other permits which are not applicable in those areas, like we have CAA, and the African countries have got exemption from certain of the agricultural, restrictions and related. So I would say the best that we would want to do is to assist from a knowledge base of what happens in South Africa, because there's quite a high standard of compliance. I mean, it is quite very rigid and it is very robust, and for applying into the African entities. The one that's the biggest challenge, and I think it's the one that a lot of us battle for, because it's even being applied in a South African context, and that is to the compliance to all the banks have got compliance to equator principles. And that is very difficult to reach out and to attain, say, for instance, in a more rural sort of African areas. So we've got yards of experience. I definitely think that we can pull databases for support to entities. And there's no one direct sort of source or reference point. And that's something that we really need to work on. And it's something that can really be tabled on an ESI level, VUCA and ESI, and that they do amazing, sort of workshops, webinars and things. And I think that's the support that's needed. It's those learnings, because it's never the same. There's many different pitfalls in the permitting and licensing.
Nice. Thank you. Thanks, Joe. We've opened it up for our live Q&A. I've noticed we have 2 questions, and I'll just read them out. So to my panel of experts, please feel free to just unmute and answer if it's something that you're comfortable with. So I'll kick off with Joel's question. So Joel's question is, how are mining companies in sub-Saharan Africa structuring partnerships with independent power producers to ensure both financial viability and sustainable energy delivery, especially in regions with limited grid access?
And that's to my point, is that I'm saying you need a collaborative pool. If we go to, let's use Zambia as an example, where there was generation and grid from the north with the DRC, with hydro, and that's fallen away. The downstream grid infrastructure needs replenishment, and you've got these big hungry power suppliers. So in South Africa, you had a different context where you've got 60% of South Africa is municipal and 40% is industrial, but the industrial actually carried and drove the forcing to subsidize the domestic areas. What you need to do is a turnaround in Zambia, and it's one of the things that we'd like to present, and it's par for the course for all of the other countries, is to see the mining entities that are creating the huge demand on the grid, and be LPUs, large power users, or the key customers, the 5 key customers, replenish the grid downstream by overscaling and by pooling together with a set of IPPs. It works. And it's, I think, a good principle that we would like to put forward and that we'd be presenting.
Thank you. Thanks, Joe, for that. I hope that answers your question.
I think the one sorry, Helen, was also just to answer the gentleman or the lady's question. Sorry, I couldn't read there. But you must understand that you can have multiple. Everybody's fixated in the traditional 20-year PPA. So if you can have multiple greenfield PPAs that enter and exit, if you do a collaboration process with, say, for instance, a group of mines to a group of generation, if that makes sense.
Thanks for that, Joe. I hope that answers your questions. Thumbs up. Thank you for that. The next one, I'm not sure it's a question. It looks more like a contribution. This is from Rui. I hope I mentioned that right. So it says reliable, affordable, and sustainable energy demand. Among the main alternatives, consider the green hydrogen production with the use of renewable wind, solar, and hydro energy storage local resources. I guess that's probably just a contribution. If at all you're supposed to ask a question, please feel free to just complete it in the chat. We are now remaining with 10 minutes. The conversation has been very interesting. I didn't even notice the time running by. So maybe in the last 10 minutes, I will ask 2 questions. Please feel free to pick on it, whoever feels they can answer that. So my 2 last questions will be, what are the biggest barriers to scaling clean energy solutions in mining from a policy standpoint, financing standpoint, or technology standpoint?
Helen, my sound cuts out. May I please ask you to repeat the question just very quickly? I apologize for that. I think it's not only
No,
cold
no,
and
no.
but the airwaves are glitching here. Sorry.
No worries. So my question was, maybe let me ask you to say, what is the biggest barrier? Seeing that we're running out of time, what would you consider to be the biggest barrier to scaling clean energy solution in mining? It could be in policy, it could be in financing, or I hope you got the question.
Your question said it was policy, financing, and you did cut on the last one, policy, financing, and technology.
Technology.
I think technology is here. Guys, we've reached it's a nascent technology. If you think of the evolution of PV was like over 12 years. I mean, we've gone from storage over the last 2 years. I mean, we've gone from static to grid forming, within the speed of light. So I think the benefits of the technologies and the supplementary technology to that, because must not think of lithium ion as the only type of storage solutions. I think it's definitely financing from the mining areas because they need to show longevity of the mine. So every bank will look at the tenure of the debts and the challenges they have of, as I said, is producing, committing to the life of mine. So the banks remain conservative and want to see new mechanisms, both in deployment of the clean energy developments, but also on the focus on precisely the question that we spoke about just now. How is this de-risk for us? Because otherwise the cost of the finance becomes unaffordable because the amount of guarantees layered then on it, whether they do, do a PPA type of transaction or, on balance sheet, it just becomes unaffordable. The easiest path of least recourse is if the mine has enough money to actually do it on balance sheet and then refine, afterwards and open up another debt facility. But it is still conversations that have to be had. And there's different lenses that are applied to the different banks. And I think Rian can also testify to that. I mean, depending on whether you're Anglo or who you are, there's different focuses there.
Yeah, I also think financing is a big hurdle. I think technology, just to add to that, has come a far way in terms of its affordability. I think there's maybe still a question about the ability of technology to meet scale. It's been a while since I've done engineering and things like that. But back in when I was a graduate, I used to be involved with design of arc furnaces and things. And I'm actually not sure to what point it's still possible to run facilities like that, whether hybrid technology can do that. But I think certainly for most installations, most mining installations, it's a very affordable, viable option. I think when we look at sort of these big beneficiation plants and things, electrowinning and things like that, that's maybe a different story. But I think in terms of mineral extraction, technology is not really a barrier at this moment. But certainly financing is a big one. I mean, regulations is always a consideration, but I think financing is maybe sort of the key thing that holds that all together by the end.
Yeah, I think the tech is, I think it's proven it will. But the other one to add there, Rian, is that I think policy is actually a driver to unlock it these days as to opposing it because they've got ESG compliances. There's multiple things, SED requirements, ED requirements, equator principle requirements. So a clean energy development offers the man the ability to tick all those boxes. You just can't get the bucks.
Yeah, exactly. And something that I didn't mention in my intro. Yeah.
Sure.
Something I just want to add is
remaining with 5 minutes. I'm going to ask before you add your last commentary, and I'm going to ask that each of you just kind of give us your important takeaway to the audience in a minute. We are remaining with 5 minutes, so you can take it away, Rian.
Yeah, so I think maybe the main thing I hope the audience can take away from this, and I think the conversation sort of naturally, without being scripted, ended up going that way, is we've the continent's got some significant potential and infrastructure. I mean, we spoke about SAP. I failed to mention what a great success SAP is, despite some improvements that needed, but it's excellent things that we can use. And I I think for mining, it's important to consider all of these different tools and technology infrastructure like SAP, markets. We discussed alternative offtakes. We discussed how important ESG is to consider the whole, all of these aspects when you think about your energy supply. And the last thing I want to add is how important it is for the renewables to be contributing to mining, because we've got a team that focuses on things like CBAM and the potential effects that can have on our competitivity, which is also something that's critical. So we need to find a solution, and that's, I think, going to take looking at everything and using everything we have.
Thank you, Rian. Joe, and then Henry will close for us.
Okay, so I think that the missing link sometimes is confidence in either the technology or the ability to prove the results and the related. A lot of the times when a lot of entities are fast followers, especially when you're dealing with companies that are listed and have other types of governances and compliances, and that they've also got a myriad of tick boxes there. Platforms like these, I want to encourage, and like ESI Mining, to start getting the collaboration or the pool of almost like I say, like a center of excellence data. So you were talking just now about, but what about policy challenges? That we really should see more collaboration and more studies and more learnings of actual projects, but condensed. Because when you Google and you hear about this project, you hear about that project. If I put on my SAIS's hat, one of the things that we're trying to draw together is to get everybody to show and tell. And I think that's the biggest. These two risks that we have with people. One is everyone's so scared you're going to steal my cabbage patch, you know what I mean? So they keep the data to themselves, and we need to sort of unlock that, and we need to create that collaborative pool of excellence, because there's multiple challenges, but they can all be overcome. And I might have fixed one, and you might have fixed one, and if we put the two together, we can help Rian fix his. So I think that's where I'm challenging Clay and the ESI team, and to see how a person can get that's going to have a multiple reach. So the proof in the pudding is the eating. It's been done, it's been tried, it's been tested, and I think that the failure rate is just because a lot of people are in isolation and they're protective of their project. So no one wants to share their project because they're trying to get to financial close, or they have dreams, and the other part is to encourage O&Ms to give us more technical, how can I say, renderings as well. I mean, so it's a technical part, it's that part. And then your question, I'm going back to your question, because your question gave me a lot of room for thought, is if I'm in Zambia and have a policy challenge, who do I phone? Right? So you asked me the question, but I'm thinking I've been looking at the chat and the guys that are in chat. There needs to be that sort of central repository in this, because the just transition, the energy transition is not something new that we're doing in Africa. It's just that Africa can take the quantum leap because we don't have too many established big coal entities and things going north, right? But in the US, in Britain, in the UK, and that you've seen the energy transition, we can learn from them and make the studies available. The transition for us is going to be far easier than it was in those countries. But there you have infinite support structures, and I think here in Africa base we don't.
Thank you, Joe. Henry, over to you. Your 1 minute.
Geez, thank you so much. I don't know how to top that, Joe and Rian. It was quite powerful. Yeah, I think from our side, I think it's important for the people to know that energy storage is adaptable, and it's limitless. So if you look at, and what Joe said is there's so many technologies out there, but we're all keeping it to ourselves. And I think that's a fundamental point is that to let the eggs out of the basket and then see how we can grow this together, and provide a solution that is workable and working for everyone to use. So there's a lot of features and good features in energy storage now in the market, and people just need to explore on what the capabilities are, and multiple features and possibilities, and we're more than happy to help and assist where we can. Thank you for the opportunity once again. I think this was a powerful discussion, and to my panelists here, you guys were extremely well. Thank you for that, and I appreciate the time here.
Thank you, and thank you, Joe, thank you, Henry, thank you, Rian, and thank you for everyone that has managed to attend. there you have it. The conversations are a lot, and we couldn't box all of them in the 1 hour that we had. So I'm looking forward to seeing all of you at the event. The details are on your screen. And let's meet in the last week of August 27th to 28th at the C&I Summit. Thank you.
Right. Thank you to ESI and the team and the fellow speakers. It was great.
Appreciate it. Thank you, everyone.
Thank you, everyone. Thanks. Bye.